When will mortgage rates finally come down? Is May 2023 the month that mortgage rates will take that turn to start to decrease? We're going to see there's a couple different things going on in May that could affect mortgage rates. Stay tuned. In this video, I'm going to get into it. All right, Matt, the Mortgage Guy, powered by You Mortgage, licensed in 47 states. Go to greatmortgagebroker.com, fill out the quick form if you want to connect me and my team, get yourself pre-approved and get rolling. In today's video, I want to talk about the all-important, the million-dollar question: when are mortgage rates going to come down? This is a common question. People, I understand, are strapped. Affordability is an issue. I've talked in other videos why we don't want mortgage interest rates to go down too far, too fast, because that's going to cause a whole new problem in housing. But this video today is more to talk about the different factors that could influence mortgage interest rates. This week, May 2nd and 3rd, the Fed is going to meet. It's 89% was the last poll I saw that the Fed will increase the Fed funds rate by 25 basis points, and then they will likely pause. And some people think they might even do some rate cuts towards the end of 2023. So what the Fed does and what their actions are is definitely going to have an impact on mortgage interest rates. But the big thing this month, in my opinion, and in others' opinion, is the May 10th CPI reading. That's the Consumer Price Index. That's basically the measure of inflation. And if you've watched my channel or you've seen it elsewhere, mortgage rates generally follow inflation. When inflation gets down, gets under control, more than likely you're going to see mortgage interest rates follow. So I will show you the chart of what inflation has been up to, and then know that if there's an inflation reading on May 10th that shows inflation is on its way to that target that the Fed has kind of pointed to at 2% inflation, and it's got any sort of dramatic move lower, it's going to have a positive effect on mortgage interest rates. Mortgage interest rates will come down. So without further ado, let's look at the last 20 years. All right, 12-month percentage change, Consumer Price Index. And so, you know, these CPI readings are based on a 12-month change, so year-over-year numbers. And so this goes all the way back to March of 2003, 20 years of inflation data and what that looks like month over month. For those of us that were following this, we know that inflation went bananas and peaked at 9.1% in June of 2022. When it did, the Fed had realized, when they had called a lot of this inflation back here transitory, no big deal, no need to change monetary policy and to increase the Fed funds rate because this stuff is just transitory. They realized a little bit too late the error in their ways, and they got to raising the Fed funds rate real quick in 2022, especially the second half of 2022. And that was all those Fed rate hikes, a lot of the stuff that caused mortgage rates to also go a little bit bananas. And you'll see here from, you know, June, early June of 22, we had rates in the low fives on a 30-year average. This is from Mortgage News Daily, that went all the way up to, that's a 7.37 on October 20th. So over that 4-month period, you know, June to October, rates went up dramatically, over 2 full percent. So since a lot of this inflation has been, you know, coming down, 8.3, 8.2, 7.7, 7.1, 6.5, 6.4, 6%. The last reading, March of 23, 5.0%. April's reading comes out May 10th. If this reading comes out 4.2%, 4.5, I mean, whatever it is, it's going to show a continued decrease in inflation. I'll show you the chart too from my 2023 forecast that showed, how generally speaking, the 30-year fixed mortgage rates and the CPI number generally lockstep, right? They're going to go up as inflation goes up and come down when inflation goes down. We know that part of the reason for the inflation data to lag and not immediately be affected by all those Fed rate hikes is because the lagging effect of data. Even though we knew in real time, month over month, shelter costs were coming down, it showed them going up when you were looking at the data from December and January and February. So while shelter costs in real time were going down, their month over month data showed it going up. And that is a big part of what goes into the inflation number. And so it was, kind of wonky in that inflation numbers showed up worse than they really were. And we know that these Fed rate hikes that have already passed us and they're in the rearview mirror are still having an effect on the overall CPI number today. May 2nd and 3rd, the Fed meets, they do their quarter basis point rate hike. As predicted, it's, a 9 out of 10 shot. I was going to make a joke about Curry and free throws and then talk about how he missed a lot yesterday, but they ended up beating my Sacramento Kings. So I can't knock Curry and his 50-point performance because that was unfortunately the highlight for me and my son was watching a legend drop a 50 piece on our Kings. All right, back to inflation and mortgage rates. 2nd, 3rd, the Fed does their thing. That's already baked in. The market expects that. Shouldn't be a big mover of mortgage interest rates either way. The next big mover for mortgage interest rates is this May 10th CPI number. And no doubt after the CPI number comes out, you're going to hear from the Fed. You're going to hear what their future plans are. People already want to know, is this going to be the last rate hike? Do you see potential rate cuts in the future? And there's a lot of different businesses affected, not just mortgage, by what the Fed does with the Fed funds rate and interest rates as a whole. So if inflation data comes up better than expected, lower than expected, expect it to have a lot of downward pressure on mortgage interest rates. And we could see the start of what is going to be a trend down of mortgage interest rates over the second half of 2023. Like I alluded to earlier, we don't want to see rates go too far down too fast because we just don't have enough supply in the market to withstand more demand. We already have multiple offers. And we already have a pretty wild real estate market at a lot of price levels, especially the entry level stuff. We don't want 5.5% interest rates where, more buyers flood into the market to try to gobble up the few homes that are available. So let's hope for slow and steady. Let's slowly but surely work our way down. Here's the 30-year average. So let's just throw out some guesses here. 6.73 the May 1st, 2023. Let's let it slowly but surely trickle down between 5.75 and 6% by the end of the year. And then, hopefully we've got some more inventory. We can allow it in 2024 to trend down as well, but we don't want 5.5% by June. Just wouldn't be healthy for the housing market. So let me know what you think.